thank you everybody for joining us literally from around the world for what will surely be an interesting and engaging conversation about the emerging Chinese REIT market. I'm Scott Robinson, clinical professor and director of the REIT Center here at NYU Schack Institute of Real Estate. And I'm joined today, I'll say today rather than this morning, since Michael, it's very early for you, and Fred, it's late for you in Beijing. But I'm joined today by Michael Krupa, president of Gemdale USA, and Fred Wang, Secretary General of the China REIT Alliance. If you've already tuned in, you know we've been having a pre-conversation here about the tremendous growth the Chinese economy has experienced over the past few decades, evolving really from an agrarian economy through an industrial economy and now into a consumer-driven and globally focused digital economy, become the world's second largest economy. And much of this, the capital used to modernize and grow the economy has been publicly funded, but we know there are limitations to public availability of debt financing. And so therefore, I think Chinese policymakers are rightfully looking to expand the capital markets with REIT legislation. So today, what we're going to do, Michael, you have a tremendous background in investment banking, but with a significant focus on Asian markets, particularly the REIT structure. And Fred, you've been a champion of the REIT structure for many years in China, lobbying policymakers, speaking with institutional investors, gathering enthusiasm among retail investors. What I would like us to do today is really speak about the lessons learned from the US and Western REIT market, and think about what it takes to build a strong and robust REIT market, and what will likely be done in the Chinese market, what could be done, and kind of start hopefully will be a long-standing conversation about how to grow a market that will likely surpass the US market probably by multiples over time. So with that, why don't I hand it over to Michael, maybe kick off with a little background on yourself, and you're thinking about where this Chinese market might be headed.
Thank you so much, Professor Scott. I feel in some respects I've been awaiting this day for about 15 years. When I was the head of UBS, Global Asset Management Real Estate, particularly in building our business around Asia, I was exhaustively exploring groundwork for China REITs. I was way too early. But let me put some of this timing in perspective. I certainly, as an investment banker, was fortunate to have been integrally part of the REIT explosion in the US, 93, 94, and throughout the 90s, REITs were making up in some years as much as 33% of all the equity dollars raised in the public markets, and had the vantage point of watching sector after sector go into the public equity markets, whether it be the major food groups of the multifamily, retail, office phenomena, and then we had some specialized fragmented mom and pop sectors like assisted living and some others, self-storage particularly, go into the equity market. So I feel fortunate to have been part of that, and also part of quote unquote exporting of the REIT phenomenon in some respects to Asia, where it was somewhat nascent. I was integral in 2001 when Japan REITs first were being launched. Right around September 9th, 2 days before September 11th, when two of the larger REITs, J-REITs, were being created. I was part of creating 4 J-REITs and being on the board of directors, so certainly have different vantage points of understanding transparency, governance, and those sorts of elements. And was able fortuitously also to navigate around Asia and work with policymakers, stock exchanges, and so forth in settings like Singapore, Hong Kong. In Hong Kong, for example, from a public policy perspective, we had been part of what was called the Link REIT, a $3 billion IPO of the housing in Hong Kong. Technically not the housing, but the retail parks and the car parks and the retail right around the housing. So there are certain elements that play well as public policy elements. But Japan particularly important because the sector became systemically important, the REIT sector. If you put into perspective back in early 2000s, there were no real fiscal policy tools because debt to GDP was about 200%. You couldn't keep pushing, creating bridges and so forth. Some would argue to nowhere. You had monetary policy at its fullest, where interest rates were already at zero. And the problem was, in the Japan economy, you had a logjam where so much of the problem in the underlying economy was debt and debt within the banks. So the J-REIT market, I would argue, it's an untold story in some respects, helped put the Japan economy back on track early 2000s. And I highlight that as one of the more important stories of REIT phenomena creation. Of course, Singapore has become systemically important, and so many other markets. But I'll just end these quick comments by sharing that in China, way too early, in the early 2000s, and here are the basic reasons why, and perhaps if we juxtapose those reasons to today, we can see we're in a very different framework. Much of the real estate back then was really owned in strata title, meaning that owners were owning a floor in a particular building and maybe the buildings weren't professionally managed. There was concern on the part of some of the regulators of too much of a potential speculative frenzy because there wasn't enough for some of the REITs, if they were created, to buy. The challenges we had, and I'm sure Fred will elaborate on this, lots of different constituencies at the time that could have governed the evolution of the China REITs, whether it be, which regulatory body was it, the CBRC or CSRC, Securities or Banking Commissions? Was it going to be on the Shenzhen Stock Exchange, on the Shanghai Stock Exchange? What property types were going to ultimately go into the REIT market? But again, there was a fear of creating too much speculative frenzy. The hope is that REITs can deliver a good, sustainable, steady return and not be like some other sectors of China, China's investment arena, where the expectations are maybe too high. REITs in China can fulfill a number of great policy benefits. We've got an aging population looking for yield-oriented instruments. What do you do with your monies in China if you've got considerable wealth? You don't go into the banks. Perhaps you buy 1, 2, 3, or more, depending on allowance to do so, condo units. Maybe you go into trust certificates. The basic point is that REITs, if they're well created early on and the expectations are set in the right way, can play a vital public policy role and be vital in the investment arena in China and create great benefits for the real estate market and stability and so forth as well.
I appreciate that, Michael. And it's funny, I've been thinking about this a lot, and the presentation deck you sent me from, I think it was a 2005 presentation, really touched on obviously a lot of the topics you just said, but a lot of things we've been thinking about, not the least of which I would say, and hopefully we can dig into this more over the next 45 minutes, regulatory issues, but also transparency within the underlying or into the underlying property markets and property fundamentals. And I think that transparency oftentimes stems from obviously cultural differences, but also language barriers, and how data is really tracked and monitored and shared. On that point, did you see anything out of the Japanese market, any way that they kind of grew and expanded from data collection and sharing with investors that could be applicable to the Chinese market?
Oh, of course. If we go back to early 2000s, even though Japan at that time, second largest economy in the world, deep real estate market, many buildings in these preeminent business districts of Tokyo, Marunouchi, and so forth, each having value of over $1 billion. It was surprising back then how embryonic the data collection really was. You had around that time, and I think at time coincidentally, and perhaps as a leader, the REIT phenomena led to more data availability, which heretofore really hadn't existed. And we helped at UBS in creating some of these entities. There were groups like ERIS, which was vital, like a NACREIF in the US data collection, but it was still embryonic in the early 2000s. And certainly the REIT phenomena led to great growth of data. I take my first recreation, which was the retail property sector. There was no data for retail. Much of the properties were owned by the major Walmart type entities, and the data was closely held. So yes, Professor Scott, there was so much opportunity for the real estate industry to evolve data, create better data flow, and become more organized and sophisticated in ways that might counterintuitively not have been thought to be the case. The evolution of the public equity markets of REITs really were dominant drivers to a more sophisticated real estate market. China has a lot of those underpinnings right now, but it could get even better with the ascendance of a REIT marketplace.
Yep. And then part and parcel of that is, of course, valuations and I'll call it investor education. Obviously, institutional investors, one could argue, need less education than retail investors with respect to valuation methodologies, as opposed to just pure momentum investing. But I think a lot of that, at least in the U.S., has really been driven by NAREIT. I think they've done a tremendous job of both investor outreach, but also education and kind of harmonizing communication between REITs themselves, investors, and regulators and policymakers. Can you speak to similar regulatory bodies across Asia that might play that role? And I think we'll hand over the reins soon here to Fred Wang, and I think his group, China REITs Alliance, is playing a similar role to NAREIT over in China. But can you speak a little bit about other similar NAREIT organizations across Asia?
Certainly, NAREIT has played a pivotal role in helping sister organizations in Asia to take lessons learned and grow from them. I don't want to sound flippant when I say this, but I think through conference participation very early on. I remember the early 2000s, there was one particular group called Terrapin. We don't hear about them in the US. They would have Asia REIT conferences. We at UBS sponsored the first in 2002. There were 100 attendees. And you watch little by little as the numbers grew to now a 2,500 person pre-COVID attendance level. So groups like that were able to be in the forefront of also helping institutionalize and create a more fertile environment. This wasn't all that long ago. This was basically early 2000s, but we've gone such a long way. And I mentioned NAREIT, as you mentioned, Scott, pivotal. They have chapters and counterpart organizations in Europe and also in Asia that have been pivotal. You also have, of course, the counterparts of NACREIF guiding on the private side, taking pension fund data. And we're starting to see more and more of that all over Asia. China perhaps has still a little bit room to move in that regard, but it's individuals like Fred, I believe, that are going to help drive that even further. Again, Japan off a low base has a much more sophisticated, as does Singapore, as does many of the other countries around Asia now, much more depth to their data flow and availability.
Yep, gotcha. That makes sense. And then one last quick topic, and then we'll hand it over to Fred for his introduction. But first, I want to remind our listeners, if you have questions, definitely feel free to type them into the Q&A section, and I'll put them into the queue. I've got a million questions, so I can keep rambling on here for lots of time. So if you have one, definitely get it in there. But Michael, one last thought before I hand it back over to Fred. I think to some degree, sponsors, private equity sponsors, can play a interesting role in incubating and kind of kickstarting a market. I think you're seeing that with Blackstone in India. You saw that with some of the very large developers, I think, in Japan. Do you see a similar possibility in China?
Absolutely, Scott. I think that part of the tension might be for those of us that have watched evolution of REIT markets from perhaps even the 60s in the US into the true 1990s Sam Zell era internalization of REITs. I think what you're going to find is it's going to be the bigger players that have that asset bases and probably get perhaps some of the outreach from the regulators to please consider creating a REIT. That's certainly what happened in Japan. The larger players, the Mitsubishis, the Mitsuis, the Sumitomos, out of the 62 REITs that now exist, many of them early on in 2001 were asked to play a role. They did need to keep it externally advised and managed so that they could continue to have the earning stream from the asset management operation, control of the asset management operation. That's a continuing source of tension, of course, around the REIT world in different countries. But I think that's a small price to pay to get some of the larger players in China to contribute assets into the early creation of their REITs. I think that's a much better set of forces than them going to Singapore, because some have created REITs in Singapore. Keep it in China and let some of those early players be precursors to what, again, we all know will be a sizable China REIT phenomena.
Yep, great. Thanks for that. Fred, you are both boots on the ground, but also a huge champion of the REIT structure. We met over 5 years ago. You were in the US speaking with NAREIT. Your organization, China REITs Alliance, has been playing a tremendous role. So why don't you please introduce yourself, your background, what you're doing, and I think you also have a brief presentation I'm happy to share when you're ready.
Okay. Yeah. Fred Wang. Yeah, nice to meet you, Scott and Mike. I'm Secretary General of China REITs Alliance. I have worked before in GE Capital Real Estate and also Gemdale, the same company with Mike. We have been set up the China REITs Alliance since 2014, and we have set up a strategic relationship with NAREIT. We participated in the NAREIT conference each June since 2015. So for the past several years, we already have a good opportunity to learn about how U.S. REITs industry worked and how it's evolved. And I think the NAREIT industry has like 60 years experience. It's really good for China to learn. And China REITs industry started from 2008 after the financial crisis. Yeah, so we already have like more than 10 years pioneering test on this industry. We also have quasi-REIT since 2014. So China already done quite many experiments on this industry, and I hope this year's on April 30th, China government announced the China infrastructure REITs. Hope starting with these regulations, we will see those kind of REITs products at end of this year or early of next year. It will come into China capital markets. So China REITs industry China REITs will become one of the members of worldwide REITs industry. So would you please open the PowerPoint for me?
Yeah. Yes. There we go. Can everybody see that?
Yeah, we can see. Yeah. Thanks for the New York University's invitation. It's really good to opportunity to talk about like China REITs, which we already talked about for the past 5 years together with Professor Scott with the Shack Real Estate School of New York University. That's my background. I work in the real estate private equity industry for quite many years, starting with GE Capital Real Estate and also I work in the CITIC Securities, which is the pioneer and the leader in China REITs industry. So those kind of experience helped me to know both US REITs industry and also China REITs industry. Let's come to the next slide. That's the ceremony. We set up the China REITs Alliance back on December 13th, 2014. China REITs Alliance is set up by China Real Estate Chamber of Commerce and the Tsinghua Alumni Association of Real Estate. The China REITs Alliance was set up to help to promote the policies and practice in China, and also set up a strategic relationship with NAREIT, European REITs Association, EPRA, and also APREA, the Asia REITs Conference. So that will help us to understand how the other countries set up and also evolved their REITs industry. Let's come to next slide. We also regularly join NAREIT conference, the REITs Week, each June. This year, because of COVID-19, we have the REITs Week on website, and also the EPRA is also held in on website in December. Originally, we plan to hold a worldwide REITs industry conference in London in October, but also because of the situation is canceled. Yeah, we also visit the industries, like we visited Blackstone head office on Park Avenue, New York University, and also we have several training classes together with Professor Scott at New York University, which help us to understand how the REITs, US REITs industry works. Come next slide. That's a picture about all the worldwide countries or regions which have adopted REITs regime. So like China have considered about the REITs since 2008, end of 2008. So India, which have the pilot test of infrastructure first in 2014, and 2 or 3 years later, they come into a real estate REITs regime. Hong Kong region started from 2003 about the REITs regime. And also China also learned experience from Singapore, which also started the REITs regime since 1999. Both Hong Kong and Singapore are byproduct of 1998 Asia financial crisis. So if you come into next slide, you will see basically all the countries coming out of the REITs regime after the slowing down of some kind of crisis. So like US, they also have the slow of economy at the beginning of at 1958 and 59, and they have the first worldwide REITs regime in 1960, and China after the 10 years pilot test, finally we come up a REITs infrastructure REITs regime this year. Next slide. So that's the structure of China infrastructure REITs. Because of some kind of limitations on the laws and regulations, so China Mutual Fund cannot invest in the non-listed shares of the companies. So China using the regime called Public Fund plus ABS, asset-backed securitization regime, which you can see the right cell on the top is a mutual fund, and the second one is ABS, asset-backed security, and underneath the ABS, you can invest through the private fund or trust, or you can directly own the SPV or SPC, and then underneath it's properties. So that's the structure of the China infrastructure REITs. A little bit complex comparing with the US regime. and also even Singapore and Hong Kong regime. Yeah, China using the unit trust, or we call it mutual fund units, as a basic trading unit. While US taking the C Corp legal format. So next one. So if you compare the China infrastructure REITs with like quasi REITs in China before, and also the equity REITs worldwide in the mature market, there are a lot of evolution on the different parameters. So finally, we come to we call it two important parameters. One we call the equity. So for the quasi REITs in China, originally the third column is more like a debt product. Well, this one is more focusing on equity product. And another one is like public traded. For the quasi REITs in China, or on this slide we call it's translated into pre-REITs. So it's like 200 units in total. That's the limitation of the whole volume of whole units of the REITs. But for the new infrastructure REITs, you can just public trade it. You can increase at least more than 1,000 units, which means like you can have a big volume of holders. Well, the big difference through the between the China infrastructure REITs with the equity REITs in mature market is still we have the 90% payout ratio, but we don't have the fully release the tax benefit. So that's because of still a pilot test. We are doing the experiment. Hope we can have the clear tax policies in the future. As you can see, the US, they have a big book on the, you probably cannot show on the camera, but US REITs is driven by the tax policies. So I think like China will also drawn by the tax benefit policy in the future. So next one. Coming to the property types of China infrastructure REITs, basically you can see the six property types. On the top three, you see the sustainability and the utility and the transportation, which means like highway, water treatment plant, and power plant, those kind of things. All the three on the top three property types, it's based on the concession agreement, which means you need to have the investor owns like 20 to 30 years concession agreement, the operating rights of those like highways or power plant. And the underneath three one, including digital infrastructure, logistics, and business parks. Those are based on the land use rights and also the building's value. Yeah, that's the difference between the top three and the underneath three. So you will see those kind of property types come into the market as the REITs in the next several months. Next one. We put those kind of property types into three categories. Like on the left side is traditional infrastructure, which include toll roads, waste managed utilities, and those kind of things. And on the right-hand side is the digital infrastructure, which also a new policy released by China central government early this year. We call it like new infrastructure, or it can also be called digital infrastructure, which include data center, 5G facilities like telecommunication towers, and also artificial intelligence, those kind of things. And in the between is a pan infrastructure, which include logistics warehouse, business parks, those things. So for the traditional one, you have more focus more really on the stable income, while the digital infrastructure will provide high growth. And for the pan infrastructure, it's in between, which means like a stable income plus the moderate growth appreciation of the properties, and also the increase of the share price. So the next slide. Yeah, I think like because Mike mentioned about NAREIT and also mentioned about NCREIF. I visited NCREIF last September in Chicago because private equity industry is also quite important for because they own the asset and they operate the asset, especially in the development period and the incubation period. And once the asset gets stabilized and the operation of the operation companies, it can be put into the risk vehicle. So I think through the real estate private equity, it will incubate good asset for the REITs. So China REITs industry, the China infrastructure REITs pilot test will help to more asset to form in China, which means more and private real estate equity fund will be set up, which will accumulate asset for the REITs. That's we can call it pre-REITs. For the next slide, we can call it China has a new policy called inner cycle and double cycle. So because this time China allows infrastructure REITs, which including those 6 types we mentioned, but for the big like apartment, it will also under the consideration of the regulatory authorities of the government. For the commercial one, like office, retail, still need to go through the private equity way or through the quasi-REITs way. We also can do the products in Hong Kong or Singapore market. As you can see, the USU rate, like the Beijing Hualian listed in Singapore market, and the USU are listed in Hong Kong market. So we can see also the commercial REITs can be listed in offshore market. That's introduction about the China REITs industry.
Thanks. Yeah, thank you, Fred. Sorry, I was just trying to find my mute button there. I appreciate that. Look, if I go back to this presentation is fantastic. I would like to talk about this page, the structures for a little bit, if everybody can still see the screen. Maybe I've been around the US REIT space for too long, but the structure seems fairly simplistic and in many respects supports both corporate governance initiatives initiated by investors, but also I'll call it ease of valuation. Michael, from your work on global real estate and REIT structures, is this too complex of a structure? Is this going to create some confusion for foreign investors, or is that not really relevant and germane, since this will probably largely be a domestic investment market for quite a while?
Yeah, I think there's so many elements. If we've been part of the REIT phenomena around the world, Australia, US, 1960s, Washington involved in the 1990s. And if I look a little bit at the Japan precedent, the end game is, I think, to have these China REITs be sought after and an integral part of dedicated REIT investors' portfolios over time. That would really be the hope, that this can be part of the REIT asset allocation mix for institutional investors all over the world. And I watched the way Japan played out, where they were a little bit more domestic oriented starting in 2001, little by little. Some of us were able to create prospectuses that were tailored so a global audience could understand them. And right now you've got a high composition of real estate investors in the J-REIT market that are truly global. you've got domestic buyers, you've got regional banks that oftentimes fill their real estate needs with REITs, by the way, in Japan. I'd love to see that happen more and more over time with the evolution of the China REITs. So I think we've got to walk before we run. And this is all a great first step. Some of it not optimal, but the underpinnings will hopefully play out step by step so that the end goal of, in my view, global investors buying into these vehicles will play out. One nuance, by the way, at least in the case of Japan, Singapore, and elsewhere, it's a different appraisal regime than in the U.S. In the U.S., traditionally, we wouldn't do MAI appraisals on properties. But in Asia, particularly, again, Japan, there would be appraisal processes in place to help ensure full disclosure, transparency on the pricing of the assets, and also perhaps at the end of the year, there would be required appraisals. So hopefully those are all elements that go in to allow investors in a secondary sense, trading sense, to help understand underlying net asset values.
Right, that makes sense. And until there's a more robust market with respect to number of traded REITs, more US-based traditional valuation methodologies will probably be a little bit slow in coming, right?
Yes.
Yeah. One other note on this, I think I read somewhere there's limitations on the amount of the shares that can be floated on an exchange, and one of our audience members posed a similar question here. Are there limitations of ownership by these REITs, or will there be limitations? Fred, do you know this?
Yeah, I think the bigger challenge now, not about the legal structure, is still how to set up a good company or REITs governance or corporate governance between the mutual fund and the original asset owners. That's the really big challenge because the whole asset was sold to 100% sold to a mutual fund. The original asset owners have to own the mutual fund shares. So that's a big difference from the other country or regions regime. Well, like Singapore or Hong Kong or even US, you just set up a risk company or risk manager by yourself. And in US, you can just easily translate, change a company into a REITs, like Equinix, they changed into REITs format in 2015. Yeah. So no matter what kind of like legal structure, it's really depends on how the mutual fund managers can work closely with the asset owners and also the asset operators to provide growth or stabilize the returns and also growth potential for the whole asset portfolio. I think that's the whole industry will need to work together to have the good products, not only for our domestic institutional and retail investors, but also for the abroad investors.
Right. No, that makes sense. I really like this slide here. Interesting. I've been thinking a lot about real estate valuations, what drives that. Michael, you had mentioned obviously rent growth, and in your presentation back in 2005, you had really touched on urbanization. And obviously China's gone through a tremendous phase of urbanization. It's obviously grown the real estate sector as a result. And I think if I think about how societies will be growing going forward, it's going to be more omni-channel. There's going to be greater digital presence, right? So I think, Fred, you presented this slide very well in that if I want to start thinking about growth versus income, I can think about where cities and societies might be growing going forward. It's going to be more on the digital infrastructure side. So I think this might actually set up well and address some of the concerns that people might have about investors getting too enthusiastic and bidding up REIT valuations in the hopes of greater consolidation and basically driving unsustainable asset value or stock valuation growths. But I think this might actually allow investors a path to invest in asset classes that should secularly grow in value. You guys have comments and thoughts on this?
Matt, please.
So part and parcel in this, why don't, I also pose a question about tax benefits. Obviously, if there's been tremendous underlying appreciation of assets that get contributed to a REIT, in the US, we have the UPREIT structure, which is akin to a 1031 exchange if I wanted to defer capital gains. So I think taxes and tax deferral do play a big role in investor appetite in the US. I know that's a little bit spotty across the globe. Michael, how important do you think clarity on tax regimes, harmonization with existing kind of land tax property tax systems in China, and deferral of capital gains, how important do you think this will be on the growth of the market?
Well, if we look to the U.S. counterpart, early 1990s, the REIT explosion that I coined it before. You look back to one of the first upgrades, I believe it was the Talman REIT. If you hadn't solved the problem of contribution of properties without being a taxable event, you wouldn't have the size and depth of the U.S. REIT market by any means. You needed that. If I looked at some of the possibilities for this burgeoning China REIT phenomena, I hope that there is a mechanism where the properties can be conveyed on a tax advantage basis or a tax-free basis. Because if you don't have that, the impetus to create the REIT on the part of some of the larger Chinese players won't be there. Since we're talking about infrastructure, I will pick up on Fred's outreach to comment. In Japan, one of the REITs I helped create was called Industrial and Infrastructure REIT. It was a J REIT. And we wanted to go above and beyond just focusing on warehouses and logistic properties. We wanted to have the optionality to bring in infrastructure type assets. And the difference, though, with what Fred is helping depict here is by infrastructure, we really meant maybe airport hangars where products were flowing through, part of the logistics last mile and so forth, or maybe specialized type tanks and so forth that stored oil, that sort of thing. Not necessarily active toll road type elements, because when you go into those kind of properties, again, they're a little bit more what I would call active, almost hotel-like. So that would have been a minor difference. But the point is, there is a precedent for infrastructure to a degree being part of the public REIT market, and it worked well for us in Japan with our industrial and infrastructure fund. I'd love to see more of those around the world, and particularly in China.
Yep. Which brings up an interesting point. I love valuing REITs in the US, whether it's NAV, DCFs, or replacement cost. But I would struggle to value almost anything on this page in front of us, warehouse and the PAN infrastructure assets aside. How important is that going to be for investors to be able to do this, or are we going to solely really kind of rely more on, Michael, as you mentioned, appraisals and third parties to do that for us?
Fred, I'm assuming there is going to be a required appraisal process for assets, assumedly at the time the assets are conveyed, and then assumedly annually also, yes?
Yeah, there will be a lot of information disclosure requirements from the regulatory authorities. Yeah.
Yeah. And the other thing to keep in mind, Scott, is again, I don't mean to necessarily go back 15, 18 or so years, because so much has evolved and grown in evolution and sophistication. The appraisal community is another integral part of this whole set of players that will evolve. You'll have more and deeper data, and you'll have appraisers that become more and more sophisticated, particularly with these still somewhat distinctive property types. So whole parts of the real estate community will evolve, prosper, grow more complicated, sophisticated, I believe, over time. And appraisals and appraisal methodology will grow with that. But that'll be vital. That'll be vital in ensuring, again, a viable, scalable China REIT sector.
Makes sense. Thank you. We're getting a lot more questions to go back and discuss and dig into this ABS and mutual fund structure in greater detail. Fred, can you go back and kind of re-explain this structure again? It's a little complex, especially for some of our US viewers. And I'm wondering if this proposed structure really has grown out of the pre-REIT structure, and this might end up being more of an evolutionary structure, and we might evolve more to a Western style structure. But can you kind of opine and dig into this in greater detail?
Sure, yeah. You are correct, Scott. Basically, this structure just put a mutual fund on top of the original quasi-REIT structure. So you can just see, if you understand the original quasi-REIT structure, you can easily understand this product. So basically, underneath mutual fund, all the structures are the same as quasi-REIT. So for the already like 300 billion RMB quasi-REITs in China, it can easily change into the mutual fund. If they put a mutual fund on the top, and it can be easily public traded. Yeah, because the limitation of the law, they don't allow the mutual fund to own the properties directly, so they have to invest through the ABS. So that's if you can easily remember, understand the structure, just mean the mutual fund and plus the original quasi-REIT structure.
Got it. So really from this, if you can see my mouse cursor, from the ABS security down is essentially the existing quasi-REIT structure. And what new legislation is proposing is adding the mutual fund structure on top of that, and investors will invest into the mutual fund, which will hold the ABS, which will hold the assets. Is that correct?
Yeah, correct.
Got it. So then, does that mean that if there's going to be an integration or harmonization with tax policy, that there's going to be basically have to be changes to the tax code from the bottom up, so adjustments to the ABS tax code, or could you essentially do it from the top down and make some nuances to tax code for mutual funds?
I think like from the tax viewpoint, really we can borrow the experience from US. Like in the early 1990s, you have the uprate structure. So I think basically the tax benefits have two underlining meanings or style. The first one is during the holding period. So if you give the 90% cash flow distributed, which means you will not be double charged on the corporate income tax. That's, I think, like we can already have some kind of measures, like we have equity plus debt structure to help to lower the tax, the company income tax. But the big challenge is for the asset forming period. You have the uprate structure. If we in China, we also have the big tax rate tax called land appreciation tax. So without the umbrella or upright structure, it's really difficult for the asset to be put into REITs. So I mean, really the tax benefits, we need to come up with not only just the holding time period tax benefits. We really need tax benefits or tax incentive for the asset to inject into the REITs structure.
Yep, that makes sense. So does that tell me that the initial wave of REITs will be launched by existing ABS owner assets, or will be more municipality or government owned assets? If I look at this chart, are we going to see these initial assets coming from government or from the existing ABS vehicles, do you think?
Yeah, that's two dimensions. For the government, it's comparing with private. So from the government viewpoint, the will encourage the government asset or state-owned asset to be listed, but they also allow the private sectors to private asset to be get listed. And for the ABS and the non-ABS, there are a few assets will be coming from the quasi-REITs and change into the infrastructure equity REIT structure, but most of them are still a new setup, newly set up for the infrastructure equity REITs.
Got it. That makes sense. Thank you.
Yeah.
Looks like we have a couple more questions queuing up while I go through this. Michael, I've been thinking about diversification a lot in this tumultuous market. You obviously have thought about it a lot from a global perspective, including in that presentation way back in the day. How do you anticipate, or how would you guide U.S. investors investing into the China market? Do you anticipate a lot of investors looking to diversify? And if so, how do you think they would go about that?
If I look to precedent around the world, which I think will play out here, it will take time. It'll take time to understand the structure. And people like Fred have a big burden because they're going to be driving the creation of the China REITs to be user-friendly for global REIT investors, for them to put the China REITs increasingly in their asset allocation mixes. Again, we look at how dedicated REIT investors look to, whether it be Australian LPTs, some of the European REITs, US REITs, they look across sectors, they understand the structural elements, but it's going to take time. And the more people like Fred, who again have tough jobs, but the more they can guide the thinking of the regulators and so forth into trying to conform as much as possible to what global REIT investors typically find, the more they can do that, I think the more appetite there will be for the China REITs. Of course, all the other elements for dedicated global REIT investors are going to have to be there, whether it be the ability to understand alleviation or conflict of interest mitigation, good governance, good transparency, good reporting regimes. We already talked about appraisals. All those elements are going to be truly important. It's going to take time before the global REIT investor community or non-REIT dedicated investors start to buy in, look for yield that these vehicles uniquely provide, yield with the ability to grow the asset basis, because again, we all know that REIT investors look on a total return basis at the dividend yield, hopefully some growth through accretive acquisitions, and rent growth, meaning really same-store NOI. All those are going to have to be vitally part of the mix to get the global REIT investors and other institutional investors interested in what could be very sizable over time.
Yep, well said. I agree. Look, I'm a silver lining kind of guy. And so I've always looked to the benefits of big disruptive situations, particularly economic downturns. Fred, you astutely pointed out that many REIT regimes kind of came into their own during periods of market and economic turmoil. The U.S. market obviously did that in the early 90s, even though the legislation had been around for nearly 30 years before that. So I think this is a good time to start opening up a new capital market. But is the Chinese REIT market going to be hamstrung by starting with a quasi-fixed income product during a time of uncertain interest rates? And how might rising interest rates, if we think about the issuance of global debt and what that might mean for investor appetite and ultimately inflationary types of pressures, will there be some conflicts there between possible rising rates and the valuation of quasi-fixed income vehicles like infrastructure?
Yeah, I think like currently, at least from globally, or especially like US and China, we can still see the interest rate will be keep a very low rate. I think that's the current we can predict. And in the long term, I think after the pilot test, I think more and more assets or even more and more property type will be get listed. So through we call it, at the beginning, the government more focused on stabilization of the cash flow, but gradually, I think there will be more and more active management company or REITs come out, which will using the merger and acquisitions, broaden the asset size, and also through the active operation management and the capital management or capital structure, they can deliver better returns. So I mean, yeah, we will see more and more good REIT companies coming out, and I think with 30 or 30 operate structures and 60 REITs experience of US, we have learned. I think China REIT industry can grow at faster pace.
I like that. That really kind of bridged the entire conversation, circling all the way back to Michael's opening comments about the need for and how markets do evolve in the private side for more information flow, for more sophisticated institutional operating structures and management platforms. So fantastic. I like that.
Thank you.
We're just about out of time. Yep, Michael?
I might add one important point from a Japan precedent. And maybe Fred would agree this is going to be part of the allure of the China REITs. Japan, very different early 2000s in terms of the low interest rate environment, which again was such an anomaly back in that era, but today we see somewhat similar low rates. Your options were to go to the postal accounts and get maybe 5 basis points, not 5%, but 5 basis points, or to get maybe 10 basis points on a bank deposit. And when these REITs first started to come out and they were in the 5 to 5.8% dividend yield level, the spread was just so great. And the primary basis for the allure wasn't so much discerning management or the potential for growth in the cash flow. It was really just the stated headline dividend yield. That's why, again, regional banks and so many investors domestically in Japan were voracious in their purchases of the Japan REITs. And Fred, I wonder if, again, maybe the same where the China REITs, early China REITs will be able to deliver a dividend yield, which is still at a relatively low cost of capital, but much higher than other bank or bank-related products in China, which could lead to a lot of their allure for institutional investors, particularly, and hopefully retail investors. Would you assume that would be the case, Fred?
Yeah, I think like Mike mentioned about a lot of times about Japan REITs, we have translated the Japan REITs industry into a Chinese book. So we also quite familiar with Japan REIT structure. Currently, China, according to the government regulation, the REITs have to give out not less than 4% dividend yield. That's a lower limit. Yeah, but you know the 10-year government bond rate is around like 3%. So they're less spread in China. Yeah, but I mean for the that's because 4% is a lower limit. For some like REITs will give like another like 4.5 to 5%. That's also quite possible. Yeah.
Yep, attractive.
Fantastic. Well, look, I'm a huge fan of the REIT structure. I'm glad to see it continue to grow globally. I've been enjoyed all of my trips to China. I've been fascinated by the economic growth story there and its impact on real estate. And I'm really excited to see the emergence of a broader REIT market there. I know we've only begun to touch the surface, but we're out of time. I definitely appreciate both of your time, getting up early, working late respectively, sharing information. I want to continue this dialogue over the coming months as the market evolves. Fred, I'm going to invite you back, hopefully to guest speak in my capital markets class later this semester. Michael, we're going to have to do another event with you, speaking about cross-border investing and international relationships. But in the meantime, thank you very much for your time. I appreciate it.
Thank you for this.
Thank you, Scott and Mike.
Thank you. Goodbye, Fred.
Bye.